Welcome to today's morning update from Phoenix Blue on Wednesday the 27th of September. I'm Tom Colley and I'll talk you through the news in the markets this morning. Okay, let's start over with the news. Number of things happening yesterday. We had the Bank of Canada Governor Paulos speaking. He was quite negative about the Canadian economy. He spoke of it taking 3 to 5 years for the Canadian economy to recover from lower oil prices, and we saw a negative pressure on the Canadian dollar from that, but also we had comments in respect of oil production from Iran, saying they were intending to continue increasing production. That basically put an end to any possibility of a production freeze agreement of OPEC members this afternoon in Algiers, where there's a meeting, a general energy meeting, but there was going to be a side meeting to discuss oil production, but that looks to be clearly off the table today. Oil prices rose yesterday. Oil prices fell yesterday. That increased the pressure, or the downward pressure, on the Canadian dollar. Worth noting today that we also have the crude oil inventories out this afternoon, so that could play into that picture as well. But we'll have a look at the US dollar CAD chart shortly. US consumer confidence came in really nicely, actually, quite strongly at 104.1 versus a forecast of 98.6. We did see some dollar strength through the day, and again we'll look at that slightly in a moment or two. We also had the FOMC member Fisher speak yesterday afternoon. He is actually a hawk, or termed a hawk, so he is, of the members of the committee, he is one of those who favour rate rises, although he didn't dissent against the rate that was held last week. Interestingly, we've got another speaker, Bullard, this afternoon. I think there's another one on Thursday. All three are hawks. So having held rates for this meeting, the Fed have wheeled out 3 hawks and no doves this week speaking. Interestingly, I thought about this and thought, how far ahead do we know about these speeches? And there are none listed yet for next week, so that suggests that these are appointments that are made at speaking engagements, but quite possibly that the Fed decides who to send dependent upon what sort of message they want to give. So that would suggest to me that, having held rates and talked hawkishly about a rate rise in December, they're pushing that story through now. But as we've talked before, there's quite a lot of a bumpy road ahead with the presidential election through to that December meeting and potential rate rise. Going forward to today, we have core durable goods. Janet Yellen testifies to, I believe, what's Congress. The Bullard speech we've already mentioned, and ECB President Draghi also speaks. The euro has been pretty bearish so far this week. We are short the euro at the moment, so we'll be watching to see if anything comes out of that. But it may be that I think that could be the meeting with the Bundestag, the German Parliament, which is termed a closed meeting, so we may only get feedback afterwards. Suggests we won't actually get the minutes or the text of the speech, but things are normally spoken of after the event, so I'll be watching that quite closely. Right, over to the charts. Here's the US dollar. As you say, we had quite a bullish day yesterday. We pushed through this level here at 95.35 quite strongly, and then towards the end of the day price dropped back, but overnight into early this morning we have had we're still bullish above this level, potentially retesting this level, so we are very cautiously looking to trade dollar strength at this moment in time. I also, after we spoke about the presidential debate yesterday, I've also on my chart put in the dates of the next debates, simply because the effect we had from the debate last night was, the night before last, was more dramatic than certainly I anticipated, so I want to be aware of those ahead of those days. Here is the euro, and the day before yesterday we shorted it off the trend line at the top here. You can see the entry there. We had money off the table. We now have a second entry, an intraday entry to add into that. So we've got money off the table. We've got the stop, first moving to break even, but now the stop's moved to the same level as the stop for this second entry. So we've got profits locked in as well, looking for further downside. That opportunity still offering us a 3-to-1 risk reward on the down to the level of our target down here from that intraday move. Okay, also on the euro, we're also short euro pound from up here. This is the 4-hour chart. The reason I've shown you the 4-hour chart is look at these lovely levels through here. I always like to see this sort of what I call a step ladder effect. That means if price is going to come down, we've got opportunities to get in, price to drop lower in this instance, money off the table, break another level, retest that, break another level, retest that. So we're adding in to our position with the intention of building a nice sizable position as we run down. It's not a lot, not that I went to that type of opportunity a great deal, but by the nature of the way that we trade, in that we have a very small initial target based on a relatively small stop level, we get money off the table, so then we've got no risk on the table, so we can find out, let the market give us the answer of how far it's going to fall, etc., etc. I was looking for an opportunity for an entry in here, and what we can see is the 30-minute chart, and basically what we've got is a consolidation below this resistance level here. So intraday I'll be looking for the possibility of a breakdown and a retest of that level. That there's the 30-minute chart, and I'll be looking to potentially enter this market with maybe a 20 pip stop on a relatively small risk, because obviously if we're using smaller stops we can risk half the amount of the sum of money that we risk, but get the same pro rata reward in terms of let's call it pounds per pip. Another market that I'm interested in, less so to trade, is the Aussie. Aussie's showing some strength. It is seasonally strong through the month of September. As you can see through here, that's been the case here. We haven't seen the opportunity or the other side of this market in terms of the US dollar doing what we want to take advantage of that. However, as a seasonal play for the month, we had highlighted Aussie CHF, with the Aussie being the seasonally strongest currency pair and the Swissy being the seasonally weakest pair for September. And we've now got a clear break of this nice trend line here above a clear level, so we will be looking for a close above here tonight and a potential retest of this level to take this to the long side over the next few days. Again, clearly one that we would have liked to have taken advantage of first, but the circumstances in the general market haven't made that we haven't had a high probability opportunity in this bullish move through here. We've been looking at the New Zealand dollar this week. On Monday, I think I said I was looking for a way into the market here, a price action entry. Although the market's done what we wanted it to, it's reversed off this level here, and also the trend line, which is part of a rising wedge there, so we expect the breakdown from there. We have seen price pull back, retest the trend line and the level, and we're now bearish today. But as I said, I haven't had a price action entry when I've actually been at my screens in order to give me an entry into that. However, that was only going to be a cautious low risk entry. This is the level that clearly we want to see broken. Significant range over the last few weeks, and even that range has been in existence prior to there, although subsequently broken and broken back in. A break below this level will reinforce the position that we have about the markets, the New Zealand dollar weakening at this moment in time. Okay, the other one that we saw weaken, we've spoken about CAD. We had the Governor of the Bank of Canada, Pollov, suggesting 3 to 5 years for the Canadian economy to recover from lower oil prices. Clearly not a bullish statement. Price came right up to this key level here, kissed the level perfectly, didn't break through, but we will be watching for this. We've seen a dropping oil price. We'll be watching the crude oil inventories this afternoon very closely, because if the inventories aren't reducing substantially, we potentially have the opportunity of a break and retest of this level and weakening on the Canadian dollar to the long side on this chart. You may remember we also had the Bank of Canada leaving the door open to potential further rate cuts going forward. Okay, guys, that's the outlook for today. If you like the way that we look at the charts, we use clear charts, we don't use lagging indicators. We have the opportunity, if you come and learn exactly what we do in much more detail, it's also the opportunity to trade for 4 hours live with our two top fund managers. This happens every month in London. It's a 4-hour event in an afternoon in a London location. If you are interested in that, please go to the contact page on the website. Tell us that you want to get details for future events. In the next day or two, we're a little bit behind in this because we were in Norway yesterday doing the same over there. We will be updating the events page so you can actually go through for specific details for that event. But I said it is a monthly event, so just get in contact with us and tell us you're interested, and then we can keep you updated on the next event. So even if you can't make one, you can potentially make the next. Okay, guys, that's it for today. A few more opportunities than we potentially were expecting earlier in the week. Do trade carefully, because there still are a number of speeches out there to keep our eye on today, which have the potential to move the market. Okay, thanks for listening, and we'll speak to you again in the morning. Take care.